5 a.m. It's 8 p.m. here. Hey, Lucky, what's happening? Just getting ready to go. Not even gravity can pull you down. You're the wild, the wave, the crowd. You reach the sky from London. You have the future caught on nowhere. Doesn't know what the hell were you thinking. You laugh and say, I keep the daylight breaking. Every day's a quest, not some disguise. Dive into the deep, fixing the world while the rest of us sleep. Your heart set on giving, no matter the strain, building your legacy through love and rain. Julie knows that fire in your soul. Cooper, what's happening? Ryan, nice to see you, Ryan. Don't know where's that's a hell. What the hell were you thinking? You laugh as you got keep the daylight blinking. Every day's a Christmas on the sky with Jesus strong. Yeah, let's get the ball rolling. Let's get the ball rolling. Hold on, where is it? There it is, right there. Found it. Just had to find the button. All right, and there we are. Historical data. There, this is a little bit of fan. Keep the air moving. Dividends only, all the dividends, there we go, and back to that. There we have it. Yay! All ready to go. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Looking for a simple, safe, predictable, consistent 1% per week. AAA dropped 23% today. Ooh, Ryan, check that out. We'll take a look at that first, okay? Sit tight. All right, so that being said, let's see what you guys have. I'm just going to go by what you guys have. Opinion on the creature from Jekyll Island. Oh, no, no, no. No, do not try to pull me into politics. You will not like what I have to say. Nobody does. So, that being said, let's get the ball rolling. Let's say hi, see who's in the house. Who's in the house? We got Mr. Mike. What's happening, Mr. Mike? How are you doing today? What else do we got? We got Shadow Gamer. Nice to see you. Over here we got Ryan. We got Cooper. We have Lucky. Loria. Good evening, Loria. How you doing today? It's Hartkin. What's happening, Hartkin? Okay, good. Cool beans. Nice to say hi to everyone. Not AAA, Advanced Auto Parts. Oh, yeah. AAPP, double AP. Yeah, got it. Advanced Auto Parts. I got you. All right, down here. Dylan, what day for Bitcoin? Okay. What a day for Bitcoin. CSX, Matrix. We'll take a look at that. Jimmy, nice to see you. Yep. Who do we have over here? Over here, we have MexiCrater. Okay. Alexandra, how you doing? Talk Mac. Cameron. Okay. Alpha, Chris, Red, Zess. Jonathan. How's it going, Jonathan? Lepster. Paver Alert. Okay. Malawa. Johnny, what's happening, Johnny Lang? Nick, West. W's in the chat. W's in the chat. Okay, whatever. Asterica, what's man? All right. Gary. Hatonia. Tony for short. Tony, how are you doing? Millis, how are you? Hatawi, good evening. Anorenda, okay. Philip, Johnny, Mason, Canpit. Chanpit, okay. So Hiko, all right. William, nice to see you. Zatman, Yatmiz, is that right? Yadzim Nunez. Good evening. That guy, Willa. What's happening, that guy, Willa? Nice to see you. William, nice to see you. Adobe. Ooh, take a look at that one. Paca, Rushane, Calvino, opinion, the creature from Jekyll Island. No, 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 no. Do not try to drag me into political discussions. No, no. Otto, BTG, Baring Assing. Okay. High tech. All right. Sweet Den, nice to see you. Move the camera. All right. Yep. It's one of those things you have to constantly remind me of. Sang Lashes, nice to see you. Cam, hello, hello, hello. And over here, we're going to say hi to everybody. Make sure say hi to everybody. Gillies, what's happening, Gillies? Over here, we have Chris Lugent. Hey, Jason, Azaz, Alai, Jeff, Law, Idun, Murray, Momo Trader. Oh, okay. Mike's Jones Martini, Dr. Stacy. Nice to see you, Dr. Stacy. Testicle, that's a weird name. Harry for good. Nice to see you again, brother. All right, so first on the list today is going to be Advanced Auto Parts. Wait a minute, let's take a look at Dow. Dow's already up there. Might as well take a gander at it. Get the tea going this morning. All right. Let's take a gander of what's going on today. I'm surprised I can even see out of these things sometimes. You ever see that, All right, who do we have here? Ron Cook. What are the advantages of your method swing trading? It's boring as hell. Seriously, it is. Doing the exact same thing day after day after day. We're only looking for 1% a week. I mean, 1% is nothing. Who gets 1%? Anyway, simple, safe, predictable, consistent 1% a week. Only takes 5 to 10 minutes a day, less than an hour a week, 1% of my portfolio. That's over 50% a year. Nothing special. Just boring 1%, crappity, crap. All right, what do we got? All right, W's on the chart. Got that. Oh, BRK. First one on the list. All right. Advanced Auto Parts. Let's do this. What happened today with Advanced Auto Parts? AAP. Oh, look at that. Did I see this coming? No, nobody saw this coming. Look at it. Uh-oh, what the hell just happened? Hit the wrong button is what happened. All right. Who do we get? Ant World. Oh, shoot. I was supposed to call you today. Damn it. Sorry about that, Ant World. I do have your phone. You are on the list for me to call. I just didn't get around to it today. All right, so Advanced Auto Parts. What do you think? What happened? And here's where you really test your resolve. Okay? You test your resolve. You buy something, you think it's going to do one thing, and boom, it does the other. Well, look at Advanced Auto Parts. It came up as a consideration because of this movement right here. Then we had this big drop down today. Let's zoom in and take a better look at it because we do have a question in the comments. So the highs up here at 65, lows down here at 37, big drop. Big jump, big drop all over the place. Here it is, back here. Listen, we started here a year ago, exact same spot a year ago. Big drop. What is that? Let's zoom in and talk about it. Why not, right? Zoom in. Okay, so here's the last 30 days for Advanced Auto Parts, and it's easy to see. Okay, down, up, down, up, down, up. This is what we were looking at right there. We saw this Wednesday, Thursday, Friday, Monday, Tuesday, up. And yeah, it would have been great getting it on Tuesday, but then, what is this? What happened there? Advanced Auto Parts. So if you jumped into Advanced Auto Parts at the beginning of the week, let's back up a tiny bit. Okay. If you saw this the other day on Monday, up, down, up, that looks almost like a perfect setup to jump in. Just jump in right there. Okay, but no, we were surprised, weren't we? Look what happened Tuesday and Wednesday. Okay, Tuesday, Wednesday, Thursday. What happened here? So here's the thing. If you bought up here at 57, now it's down here at 42. Well, here's the thing. If you bought on Monday, which is what I do, I always buy on Mondays because, Monday, Tuesday, Wednesday, Thursday, Friday. I want to get out on Friday. So bought on Monday at 57, and now today you're at 42. Can you really say, okay, it happens? Think about it. Really, it's like a gut check. Boom, right in the gut, like a gut check. Can you do it? Can you hold on without panicking? Can you buy something, watch it drop 20, 30, 40, 50%, and not panic? Because remember, we're going into this with a long-term view, as if I'm going to buy this and hold this for the rest of my days. Is it giving me increased dividends every year? Are they consistently profitable? This is just a temporary setback. It happens. It's part of the game. When you play Monopoly, you run the risk of being sent to jail. Every time you go around that board, you run the risk of going to jail. Every time you play this game, you run the risk of this. Can you live through it? It's an honest question. Can you see something drop, not panic, and still be able to hold it, hold your head up high and say, you know what? I like Advanced Auto Parts. Just a minor setback. Let's see what happens. That's my take on it. That's basically all I can say. Is it happens, and when it does happen, can you hold your resolve? And when this option expires tomorrow, because if you got in on Monday, like I did, I jumped in on Monday. Stock drops. Now Friday's tomorrow. What is it going to do tomorrow? Is it going to be here? Is it going to go back up? What's it going to do? And then when Monday comes, what am I going to sell on Monday? Because I'm in it at 57. And now we're down here at 42. We're going to check that out on Monday. I bought Advanced Auto Parts on Monday. I got that one. I'm all good because I'm holding it until I sell for the same price or higher. Perfect. However, I will still continue to get paid weekly by it. Ryan, that's awesome. Sit tight, hold tight, don't do anything. Kat, what's happening, Kat? Nice to see you. All right. So I'm glad that's working for you. Keep tuning in, because I'm in the same boat you are. I bought Advanced Auto Parts on Monday also. Was I expecting this to happen? No. It happens. Is what it is. Okay. Mark wants to take a look at CSX. CSX. Nice. Now, Mark, I'm not 100% sure if I like this one. Now, not that I'm arguing whether or not it's good or not. It's just, last year we're in the 30s. Now we're in the 50s. Does this actually make sense, and can it sustain that level? Well, let's find out. Alexander, you're in Advanced Auto Parts too. All right, hold on. Matrix has something to say about that. How come you say it's up when the candles are red? Oh, Matrix, sit tight for a second. You want to go back to Advanced Auto Parts. Because apparently he didn't see what I saw. All righty. I had to zoom in a little bit tighter, okay? Was it Katie who saw this one? Oh, who was it? Matrix. All righty. All right, so Matrix, check this out. Let's get out of this one from today. All right, right there. No, that's too far. Here we go. All right, Matrix, check a look. Bottom is here. Then she goes up. All right, that's red, that's red. I get it. She opened up here, she opened up here. So she is opening higher, and she just started closing lower. So which way is it? Is it higher yesterday, higher today? It opened up higher today, 58, so it did open up. That was yesterday, but she did pull back today. So it all depends on how you're interpreting it and what am I reading. So let's change it to this one right here. Let's go to line chart. Let's go. Well, that's almost the same. Anyway, it is definitely going up right there. And then yesterday and today she dropped. We jumped in on Monday because it was going up, up, up. See that? Higher, 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 higher. Okay, she opened up higher, she went higher, higher, higher high, higher low. That's why we jumped in on Monday. And then Tuesday, she opened up higher, closed lower, and then dropped today. We didn't see that coming. Nobody knows what's coming. All we have is an idea. Bottom, 1, 2, 3 days up. Right there is exactly what I'm looking for. Bottom right there, 1 day up, 2 days up, 3 days up. Then we jump in right there. Because it made sense when we saw it on Monday morning. Just because it doesn't make sense now, being Thursday, doesn't mean what happened on Monday didn't actually happen. Okay, Wednesday's low, Thursday higher, Friday, Tuesday, Wednesday, Thursday, Friday, then Monday, whatever. So yes, I'm in it and it is down. Okay, all righty. Matrix, does that make sense? Hope it does. Gits, nice to see you, the Gits. Bought AAP on Monday. I'm also good because great. I'm going to agree with you. I'm not going to sell mine for less either. All right, Levi. All right, hold on. Okay, way too many people coming in. Holy cow. Okay, Adobe, we'll do that one in a minute. Where are we? All right. W's in the chat. Got that one. BRK is going to be next. Oh my goodness, what do we have down here? All right, Dylan, I don't do Bitcoin. Misty, good dividend coming? Hell no. Seriously, dude, take a look at the very first dividend Misty paid out. It was like $20. Now they're below 50 cents. Not quite what I'm thinking is a good. But Benjamin, if you really want to take a look at it, I'll dissect it and take a look at it for you. ODT Trading Best. Thank you there, sir. Advanced Auto Parts had a good entry point. Yeah, it did. Entry does not equal piling in. Thank you, Benjamin. Hello. Who's that? Amir. Nice to see you, Amir. Joe T. Nice to see you. eBay, you say. Okay, Daniel, I don't do Bitcoin. Okay, strictly dividend stocks. Ryan Altria. We'll take a look at that in a minute. All right, where else are we? All right, so we did Advanced Auto Parts. What was next? BRK. That's what was next. BRK. That's not popping up. Sorry. BRK is not popping up. That's going to be no. It doesn't do that. Daniel! Bitcoin. Daniel, I can't tell you anything at all about Bitcoin. I know absolutely nothing about it. Okay? It's a digital asset that people from across the internet agree on its value. That's all it is. It's a wink and a nod from somebody you don't know. And I'm not quite sure how you want to interpret it. It is what it is. There's no hard assets backing Bitcoin. There's no gold, there's no oil, there's no T-bills, there's no CDs. There's no assets to back Bitcoin. It's a wink and a nod from a stranger on the other side of the keyboard. That's all it is. It's an agreement between strangers. Dividends is the qualifier. Misty, Benjamin, hell no. You know what? Let's do it. Benjamin needs to see exactly what he's buying in Misty. All right, so MSTY, Misty. Explain to me, Benjamin, if you would, and, for the audience participating, explain to me in a manner in which I'll understand. If this stock, MSTY, is $90 last year, and today it's at $13.67, how can you possibly say that's good? But hold on, because it actually gets worse. It really, really, really does. Are you ready? Watch. Here we go, Benjamin. We're going to go over to Yahoo Finance, because Yahoo Finance is where you find out financial information on what it is you want to invest in. You can use whatever financial website you want. There's a lot of them out there. Personal finance data. You can go search the internet. I use Yahoo Finance. You can use Google Finance. You can use NASDAQ. You can use NYCE. You can use Wall Street Journal. Whatever. Anyway, okay, so we're going to put in what we put in here? Misty, MSTY. MSTY, Misty. Here we go. All right, who is this one for? This one is for Benjamin. You ready, Benjamin? Here we go. Misty. Yieldbacks, MSTR Strategy Income ETF, MSTY. $13.67. Whoop-a-dee-doo. $13.67. And you say the dividends are great. Chill out, dude. Let's check this out. All the way back, the very first dividend. Okay? Benjamin, are you ready? The very first dividend for Misty. I got to write this so it stays on the board so everyone can see it. The very first dividend from Misty was $20.64. That's the very first dividend that Misty paid out. But look what happened after that. 12, 15, 11. Uh-oh, let's do this. All right. You ready? You ready, Benjamin? Check this out. $20. First dividend, $20. 12, 15, 11, 9, 20, 22. Ooh, going up. 15, 11, 10, 6, 11, 7, 5. 3, 1, 96 cents, 84 cents, 81, 74, 67, 69, 58, 38. Where are we now? We are now at 18 cents a share. Now, Benjamin, and for all of those you who do like Misty, MSTY, you like Misty. Great. You care about the net. Yeah, good for you. Well, look at, we got $20 is the very first dividend they paid out. The very first dividend they paid out was $20. We are officially down to 18 cents per share. Now explain to me, if the dividend goes from $20 down to 18 cents, exactly how does that constitute a good investment return? No comment on that one? If the dividend drops from $20 down to 18 cents, how can you say that's a good investment? I care about next week's dividend. Why? It's not consistently profitable. The dividend slowly decreases. Did you not see? Let me back up and read the numbers to you again, because for some strange reason, I'm thinking you didn't see them. Okay? Hold on. Apparently, I'm doing something wrong because Benjamin's not noticing that the dividend is decreasing. Okay, 20, 12, 15, 11, 9, 20, 22, 15, 11, 10, 6. We're down, it started at 20, now we're down to 6. Hold on. Where were we? Okay. 6, 11, 7, 5, 3, 1, 96, 81, 69, 58, 38, 40, 37, 30, 29, 30, 30, 48, 15, 20, 20, 18. That dividend gets smaller and smaller. What a great plan. Think about it. Buy something so that you get less money back every year. That makes no sense, dude. It really doesn't. What the hell are you thinking? Look at MSTR. Why? If MSTY is crap, what makes you think MSTR is going to be any better? MSTR. Oh, look at that. MSTR has no dividends. So why are we looking at MSTR if it has no dividends? Why? Let's go to summary. I'm kind of curious what's going on with MSTR. Because apparently if you say something and I'm disagreeing, I've got to be wrong because, you know, Lord knows you're not wrong. MSTR. Holy fuck nuggets. Are you shitting me? Look at the, did he just say look at the underlying? Did you see this right here? Earnings per share. Earnings per share. Look at that. That's freaking amazing. Earnings per share. Look at that. $106 earnings per share. That is crazy. Oops. Negative $106 per share. This company is bleeding money. Seriously, take a look, Benjamin. Negative $106 per share. That means they're losing money hand over fist. Do you even check the numbers before you buy something? It's not my data. This data comes from Yahoo Finance. Go look at some other financial website and see what the earnings per share is for MSTR. It's losing. No. Hell no. I don't even know what some people are thinking. Losing money hand over fist and still think it's a good idea. It's losing money hand over fist, dude. All right, let's get back to where we were. William, Adobe, A-D-B-E, A-D-B-E, Adobe. Looks like we're running out of steam. Look at this. The bottom's here. Ran out. The top, the bottom, where was it? Where is it? Look at this. Sideways, down, up. How much further do you think it's going to go? Look. Up, down, up. Yesterday was the high. Now she's coming back down. No. Sorry. Bernard. What's happening, Bernard? Oh. Ryan likes Altria. Ooh, and it does look good. Nice call, Ryan. Check this out. The top, the bottom. Where was it? Where is it? Down, up, down, up. Clear to see, clear as day. Let's zoom in a little bit. Easy to see. The top, the bottom. Where was it? Where is it? Down, up, down, up. Clear to see. Bottom is here. 1 day, 2 day, 3 days up. Right there. 66.94. The 67s are going for 27. That's for 1 day. We don't want to do that. We're going to do next week's. Let's get rid of tomorrow's date and put in next Friday's date. Same number. The 67. Now it's going for 75. That's more like it. So let's do this one. This one looks like a winner. Ding, 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 ding. Winner, winner. Okay. Let's do this. Covered stock, the 67. One contract. There it is. Let's play Snippy, Snippy. Why isn't this working right? Oh, that's why. All right, hold tight, hold tight. Hold on a minute. That's what I wanted. Do that. Snip. There we go. Now let's do this. Where the hell did it go? All right, let's see if I can find this. There it is. That's why I couldn't find it. Sorry, just had to get things in order. All right, new. There we go. All right, this is 820, isn't it? Save that one. 820. 820, 2026. Number one for the evening. Let's break out the calculator, see what our rate of return here is going to be. As always, to find out the rate of return, and here's where you're going to need to change some of your education, so to speak, because you're probably used to investing for annual rate of return. Well, what are you paying annually? That's what everybody says. What are you getting annually? Well, I don't invest annually. I invest weekly. I want to see what I'm making. All right, we did that question. What percentage of your portfolio, of our portfolio, should I put into single stocks or eliminate some of the risk? Now, Jimmy, I don't know anything at all about you. I really can't give you any advice. The only thing I can do is tell you what I'm doing. Okay? I can only tell you what I'm doing and give you a point of view from my perspective. I'm retired. I'm 62. The money that I make has to last me the rest of my life and still give me an income. That's why I came up with this strategy: simple, safe, predictable, consistent, no way for me to lose, for my 9-year-old daughter. Who do we got here? Not now. Thank you. Sit tight over here, you guys. I'm going to get to there in a second. So as I was saying, I know nothing about you, so I can only tell you what I'm looking for. Okay? 95%, well, actually between 90 and 95% of all my money is invested in the stock market at all times. I'm not delusional into thinking that if I put my money into cash or in the bank, that I'm going to be better off. No, because cash in the bank, in a CD or anything like that, out of my control, well, as much as it can be, I have no control over it. Okay? So what I'm looking for is a safe, predictable income on a weekly basis, not a monthly basis, not buy it, wait for it to go up type scenario. If you're looking for capital appreciation, buy your stock and watch it grow, 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 you're definitely in the wrong place. I'm looking for a 1% per week on my portfolio. So if I have 50,000, I want at least $500 every single week. If I have 100,000, I want $1,000 every single week. So I set my account up in that manner with this one simple trade that I do every single day. I don't do the trade every day, but I look at my account every day. Who do we have over here? Hamed. All right, good evening, Hamed. So that being said, simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. So Altria, we're going to look for the rate of return for this. Oh, excuse me. Whoa. As I was saying, we're looking for the rate of return for this coming week. Well, not this week, but next week. Okay, so the trade that I'm looking at now, Altria, if I bought it tomorrow morning at this price right here, the ask price, $67, and then I turn around and sell it for the exact same price I paid for it, a lot of people think that's freaking crazy. Well, it kind of is if you think about it. If I'm buying something for $67 and I turn around and sell it for $67, how can I make a profit? Think about it. It's an honest question. If I'm buying it for 67 and I'm selling it for 67, how can I possibly make 1% every week? That's the beauty of the call option, the stock call option. If I buy it at 67, I'm going to sell it using a call option. It's called a covered call or a buy right, whatever you want to call it. Okay, so I buy it for 67. I sell it for 67. I collect the premium, which in this case is $90. Now I know $90 is not a lot of money, but we're going per contract. Rate of return. One contract, $90. Two contracts, $180. 100 contracts, $900. So on and so forth. Whatever position you're in. If you can get one, great. If you can get 101, even better. We're all on a different path. We all have a different amount of money to work with. We all have a different journey that we're going. This is just one step. Money should be one less thing to worry about. That's it. It shouldn't be a driving factor in your life. What the hell am I going off on, like a soapbox? Whatever. Let's figure out the rate of return. This is number one for the evening. Covered call, Altria, 28 August. That's next Friday. The 67 call option. The stock is currently at 67.02. So in essence, I'd buy it at 67.02, sell it for less than I paid for it, 67, walk away with a $90 profit per contract. How many contracts am I going to look at? Well, let's do the numbers first, see what the rate of return is. To find out your rate of return, you take your profit, 90 bucks, put that into the calculator. If that's my investment, the return on investment would be $90 divided by cost of the trade, including commissions and fees, 6,610. 6,610, and that would give me a rate of return 1.36 for 1 week. Now think about that for a second. The whole trade take me less than 5 minutes. 1.36 for 5 minutes of my time. Now you may not think that's great, but here's the thing. If I can do my account in less than 10 minutes a day, by the end of the week it's only 1 hour. 10 minutes a day is only an hour a week to make 1%. Well, now take into consideration what size your portfolio is. Well, at 62, my portfolio's got 6 digits. Okay, let's say it's 100 grand. It's not, but let's just say it is. All right. So 1% of 100,000 is $1,000. And if I'm spending 10 minutes a day, well, 10 minutes a day times 5, that's 50 minutes. That's less than an hour. So I just made $1,000 in 1 hour. Now, if I had a $500,000 account, that would be $5,000 in 1 hour. It's still the same time, the same rate of return. So doing a $50,000 account and doing a $500,000 account is the exact same. It's just an extra 0 or 2. That's it, just an extra 0 or 2. All right, so that being said, 1.3%. I'm going to save this one. I can do 1.3. 1. Damn it, come on. Come on again. Come on and touch me. Okay, so that being saved, let's get rid of this. Let's put that back where it belongs. Let's put this right there, and let's attend to this. Which one is this one? Altria. Altria, M-O. Here she is. 1 covered call, Altria, M-O, 28 August 26th. That's next coming Friday. Not tomorrow, next Friday. Oh, damn it, I forgot to put the recorder on. Always forgetting something. No, not always. Okay, record. Start recording. And we're recording, tra-la-la. Okay, back to where we were. There we go. And we are still looking at Altria. 1 covered call, Altria, M-O, 28 August. That's next Friday. The 67 call option. The stock is currently at 67.02. My profit on this one trade is 90 bucks. 6,600 is my investment for a 1.3% for 1 week. 1 week! All right. 1.3. Altria, number 1 for the evening. Yay! The crowd goes wild. Woohoo! Next. William, we looked at Adobe, didn't we? We did. Charo, what's happening, Charo? All right. What percentage of portfolio? We did that one. Crypto cuz XLU. What the hell is XRU? XLU. Okay. I'm game. XLU. State Street Utility section of Spider ETF. No. Didn't take long to see that one, did it? Okay. Why was it so quick? You ready? I'm looking for 5 things. Anytime I look at a chart, it's always A, B, C, 1, 2, 3. 1, 2, 3. It's easy as do, re, mi. I'm talking, okay, right here. The top, the bottom. Where was it? Where is it? Up, down, up, down, up, down. It's dropping right now, so no. It should take you 2 to 4 seconds to isolate that whole thing and see what's going on. Okay, 30 days ago, we're here. 46. We dropped down to 43, back up to 44. Now we're dropping again. Not that difficult to see. A 1-year chart, you should spend 2 to 3 seconds. That's it. You're looking for 5 things. High, low, was, is, and where's the direction. That's it. High, low, where was it, where is it, where is it going? Not that difficult. Adults have a tendency to make it more complicated than it needs to be. All right, no, OSRH. OSRH. Hell no. What the hell are you thinking? Kroger, KR. Interesting. What's going on with Kroger? All right, you ready? 5 things. How quick can you see them? Less than 4 seconds, right? What's the last 90 days? Last 90 days, same thing. Now, let me go to the 30 days. Get it even closer. I mean, it really sticks out now. Down, up, down, up, down. No, no, and no. Sorry, don't get me wrong. I like Kroger, I do. Just not this week. I'll look at Kroger again next week because look at where we are. We're dropping, coming up to a new 30-day bottom. I love 30-day bottoms on a good quality company. I'm looking for a pen because I'm going to write Kroger down for next week. No! That one doesn't write. Don't you hate when that happens? I hate when that happens. That one pen don't work. That one don't work either. What the hell? All right, at least I don't have to bend down to get my pens. All right. I need a pen. I need a pen. I need a pen. I need a pen right now, right here. Holy cow, you got to be kidding me. Where the hell are my pens? Shit. All right, somebody write that down. We want to do Kroger next week. Really? No pens? Are you shitting me? I know where there's one. Hold on a minute. I mean, you stole my pen. Oh. Wonderful. I took on that toy around here. No. You can tell that I will get some in the bed. Nobody's fault but my own. I was using it for a crossword puzzle earlier. All right, so Kroger. Yes, we're going to save Kroger for next week because it just looks good. Kroger. All right. Next week it is. All right, so here we are. PM. You saw that from last night. We were looking at Philip Morris last night, and it was a good none last night. Same thing right there. Easy to see. The top, the bottom, where was it? Where is it? Down, up, down, up, down, up. Easy to see right there. And it still looks good today. Let's zoom in a little closer. 90 days, same thing. Top, bottom is right there. Still looks nice. Now let's zoom in a little tighter to the 30 days. Because the 30 days gives me a better idea. Where is it going next? And you can really see it here. The top, the bottom. Where was it? Where is it? Up, down, up, down, up. Look at that. Right there, the bottom. 1, 2, 3. Yeah, I bought some this morning. Because right there, bottom, 2 days up. On the 3rd day, I will jump in as soon as it crosses that line. And I did this morning. I bought some of that because it looked good and everything looked right. How does it look for tomorrow? Well, let's check it out. 190, 152. The 192.50s are going for 210. That's a yes. So let's do this one. I think it's kind of cheating, though, doing the same one twice. You know, today and then yesterday. You guys cheated on that one. But I'm going to give it to you. 192 right there. There it is. And here we go. Put it right there. Snip it. That way we can send it to you guys in an email for those you want it. And there we go. All right. And let's save it. 8, 20, 2026, number 2. There we go. And let's get out of that. Let's put this up to there. Bring the calculator. What's our rate of return? Same equation. Always, always, always. What are we buying? What are we selling? What are we collecting? How much is it costing? And what is my rate of return? All right, let's find this out. Profit, $373 per contract. 373. Okay, we're going to divide that by the cost of the trade, including commissions and fees, 18,000. 18,000, really? Divide 18,000. 877 comes to a grand total of 1.9. We can call it 2, right? No, all right, 1.9 it is. 1.9. And there we go. Give it a minute. All right, let's get out of that. La 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 la. Here it is. Which one is this? This one is Philip Morris. Philip Morris. I wonder who Philip Morris is. You ever met Philip Morris? I've never met Philip. I met Mr. Fingerhut, but I never met Philip Morris. Oh, I also met Mrs. Hines once. Yep, Mrs. Hines from Heinz Ketchup. All right, here we go. One covered call, Philip Morris, PM, 28 August. That's next Friday. The 192.50 calls. The stock is currently at 191.54. So can it go to 192.50 between now and next Friday? It can. It's in an upward trend. Is it going to keep going? Do you like the company at this price? Does it make sense? A lot of questions, but does it make sense? Do you like Philip Morris? Do you like it enough to jump into it? Sit down, sit tight, sit tight. 373, 18,000, what was this, 1.9? 1.9. 1.9. If you like Philip Morris. Only if you like Philip Morris. What do we have over here? Do you sell at a market price or limit? Limit price, definitely, dude. I buy at a market price, and I sell at a limit price. I looked at the chart. Thank you there, Relax. I don't think we looked at it yesterday, but I might be wrong. No, we did look at Philip Morris last night. And we looked at it last night to a point in which I bought it this morning. Yeah, because everything looked good last night. I looked at it again this morning. I said, oh, hell yeah, I'm going to buy me some of these. Now, see, I'm allowed to tell you what I bought. I just can't. I'm not allowed to tell you what to buy. So, yeah, I did buy Philip Morris this morning. Okay, what else do we have? Down here, yeah, I looked at MSTR, piece of crap. All right, Corey B wants to take a look at Wally World. Maria Guadalupe, ¿qué pasa? ¿Cómo estás, señorita and señora? Okay, what are we looking for? Wally World. All right, Walmart, here we go. WMT, here we go. WMT. Ouch, what happened here? Now, Two ways of looking at this. Okay, Corey, two ways of looking at this. One, it's a bummer if you're thinking about it or you already have it. But two, the second way of looking at it is you just had a big drop right there. Look at the chart first. The top, the bottom, where was it? Where is it? Where is it going? It was going up. Big drop down today. Now, why am I excited about a big drop? I'll tell you why. Let's go 30 days. That didn't work out, right? There we go. Here's your last 30 days. The top, the bottom, where was it? Where is it? Look, down, up, big drop. So why am I excited here? Right there, look at that big, huge drop, and look at the volume spike. So if you don't know what we're looking at, the blue line's down here, that's the volume. That's how many people on the dance floor, how many people out there buying and selling, buying and selling, buying and selling. Well, a whole bunch today. The average is here. But now today, we're way up here. You know what? I'll show you a better chart. Watch this. Now you can see that chart a little better, right? Here's the high of the year. Here's the low of the year. Okay? Up, down, big drop. A volume down here. Let's zoom into that and make that a little bit bigger. Okay? Now is it easier to see? Okay, here's the motion. Big drop. What happened there? Look at the volume. Your average volume. Let's do this right here. Move it to there. All right. There's your average volume right there. 20 million shares. Average every day, 20 million shares. What happened today? 83 million shares. That's a big jump. It went from 20 million to 83 million. 20 million, 83 million. It's a big jump. So what happened? Was it the earnings? Was it the dividends? Something not go right? Better yet, let's go back to where we were. Okay, so how do you take advantage of that right there? Well, number one, is Walmart on your list of stocks that you like? You should create a list. Everybody should have a list. What stocks are on my list no matter what? And then you take that list and you revolve it, rotate it. Like a Ferris wheel, round and round, merry-go-round, round and round, roller coaster, round and round, up and down, same thing. They go up, they go down. What companies do you like? Put it in a Rolodex, a chart, a calendar, spreadsheet, whatever, to tell you what stock to look at from what point in time. So this week, what are we looking at? Well, 30 days ago, we're here. Drop, up, down, and then big drop here. Now, I like this because that gap is going to fill. So McDonald's is going to be on my list next week. As soon as that thing turns, where am I looking at? Oh, Walmart's already on the list for next week. Definitely. All right. Not this week, next week. All right. Got it. Where are we here? Said hi. Okay, Ricky, nice to see you, Ricky. The10MinuteTrader, how you doing? Nice. Okay. Back over here, we looked at Adobe. Calvino, definitely don't want to get me into the topic of politics, dude. As a pie is Maine and O a good. Okay. Owendos. Okay, Owendos wants to take a look at Maine. Isn't Maine a monthly? I'm pretty sure it is. MAIN. I get asked about it a lot, but it's still a no. I don't do monthlies. Need the fan up a little higher, a little warm in here. All right, no to Maine. Oh, Realty, that's a no also. Walter, how you doing today? Oh, Realty, same thing. August, September, October, December, January. Those are months of the year. With the monthly option, you can trade it once a month. I only do weekly options. Rule 4, weekly options only. Pretty plain and simple. CTAS, Matrix, CTAS, huh? CTAS. Interesting. Take a look. The top. The bottom. Where was it? Where is it? Down, up, down, up, down, up. That's definitely easy to see. The top is there. Bottom's here. Now she's retracing. What do you want to call it? I call it profit taking. Right here. Check this out. Last 30 days. Last 30 days. Easy to see. 30-day bottom. Shoots up. There's your 30-day top. Profit taking. Finds a new bottom here. 1, 2, 3. 3 days up right there. 203.50. The 202.50 is going for 2. The 205 is going for 1. I do the 202s. That one looks good. So let's do the 202s. Okay, let's try it out. 202s. Here we come. Gonna need the glasses for this. Auto. We'll take a look at that in a second. 202s, you say. 202.50s. There it is. One contract. Bring you down to here, right there. Snip it. Snip it. Snip it good. Snap that chip. Baked. Okay. There we go. And today is 8/20/2026. And this is number 3 of the evening. There we go. Number 3 of the evening. Move this over to here. Now, let's find out what the rate of return is. Find the rate of return, divide the profit, 253, by the cost of the trade, including the commissions and the fees, 19,990. Why would you say 20,000? Seriously, 19,997. Come on, that's 20 grand. All right, so math. Should have paid attention. Algebra is useful. 253 divided by 20 grand. I'm not going to do that change crap. There we go. And that equals 1.26. That's 1.25% for 1 week. My goal is 1% a week. Because 1% a week, hey, Walter, you've been trying to catch my live videos. Dude, I'm on Sunday, Monday, Tuesday, Wednesday, Thursday, 8 p.m. until 10:30. All right, so back to what we're talking about. CTAS, 1.25% for 1 week. Well, think about it. If 1% every single week is 50% by the end of the year, what is 1.25% every single week? It's got to be at least 70%, right? Oh, for the fun, let's do this. Let's multiply this times 52. What do we got? What do we got? What do we got? 65. I was close. All right, so we're going to save this one because I like 1.25 for 1 week, and I like CTAS. And here we go. All right. Let's clean this up. Let's get rid of this. Get rid of that. Get back to here. And there we go. First thing we want to do is slide that over. Slide to the left. Slide to the right. Crisscross. Crisscross. All right, here we go. There we go. CTA. CTAS, CTAS. Okay, there it is. And here we go, here we go. All right, there it is. Look at that, look at that. CTAS, one covered call, CTAS. 28 August, 202.5 call option. All right, we're currently at 204, and the stock's going up. So you get a couple questions. Question 1, does it make sense? Question 2, do I like this company? Question 3, do I like this company at this present price? 253 is the profit, 19,997. Let's call it 20 grand. It's going to give me 1.25% for 1 week. All right. $1.25 for CTAS. That is number 3. Means we got 2 more to go. What else other education do we have? All right, what do we got? What do we got? Haas is in the house. What's happening, Haas? Haas, 888. Nice to see you. Uh-oh. Right there. There we go. Thank you, Matrix. That was good. All right, what do we have over here? All right, The10MinuteTrader, thank you. Mirror the camera on YouTube, please. Oh, I love it when people tell me to mirror the camera on YouTube. You ready? Here we go. There you go. What do you think? Does that look better? Yeah, I didn't think so. See, on YouTube, doesn't really correlate with the selfie camera on the iPhone. So it is what it is. There's 13 different channels. You just happen to pick one that is backwards. Otto wants to take a look at BTG. Uh-oh, BTG. All right, before I do that, I got to take a quick break for a second. While I'm doing that, I'm going to show you video real quick. All right, videos. Oldest videos. There we go. I'll be right back. That's JC.
As usually part of my internet company
Issues.
Which my dad doesn't let me call that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that will help you with the best return on life. List number 1 is stocks that are paying out each year, and then list number 2 is a list of stocks that pay out twice a year. List number 3 is a list of stocks that pay out every month. And the 4th list is lists of stocks that pay out every quarter, which is 4 times a week. Yeah. The list I'm going to send you is going to help you get the best return on your money. Wait, I just realized something. If there are 20 days exactly in this year of... There's 20 days exactly in this year, January, of the trading days. And if you only have to own stocks for about 2 or 3 days, how many times can you buy? 4 times! Or 5. Yeah. I just realized that the lists I'm sending you are kind of irrelevant because I'm here sending you a list of stuff that I'm trading, and you can just watch me. Why am I sending it to you anyways? You guys would like to be organized.
There's over 20 days until it's January. 21 days in the month. What does that mean? That means every single day you buy a different stock. There's a different company paying out dividends. Anyway, no, seriously. I'm thinking just one company per month. Just one. January, February, March, that's 12. 12. You can buy 12 different companies for the whole year and still make over 20%. It's easy. One trade a month. You can't do one per month. But, well, bump it up a little bit. Let's do 2 trades a month. 20 days. 20 days in the month of January. You do 2. 1 every 10 days. So you get 2 January, 2 February, 2 March. Blah, 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 blah. 24 for the whole year. And you can get at least 2%.
I have no idea what that was. Tapping at the back door.
2% per year.
Uh-oh. All right. Ha ha ha. One of my favorite videos. You probably ask, why did I show that? Well, because 16 years ago, my 9-year-old daughter asked me, Daddy, can you teach me? So teaching a 9-year-old is not the easiest thing in the world. Number 1, how do you keep your attention? Number 2, how do you make it so simple that she'll understand it? That's where the 5 rules come in. Rule number 1 is never buy anything that's not on your list. Uh-oh, visible restricted. Yeah, whatever. All right, restricted. Can't be showing videos of videos. Whatever. Anyway, besides the point. That being said, cool beans. All right, so I had to make it fun and exciting for a 9-year-old. I had to make it less than 10 minutes. Simple, safe, predictable, consistent, and no way for my 9-year-old to lose. Because after all, if she loses, guess who's going to be in the doghouse, sleeping on the couch? Yep, you guessed it. Why isn't this working? All right, leave that on. So, that being said, let's go on to the next one. Stress solution. Hey, nice to see you. Okay. Echo on her video. Yeah, the echo on the video was because there's two monitors going at actually there's 3 monitors going at the same time and both speakers were on. Not the point. Anyway, so to make it safe and simple, had to be easy for a 9-year-old to understand and comprehend. Let's go on to the next one. BTG, we looked at that one. Barry Hassing, nice to see you. We did remove the camera already. Host is discussing that. Good evening. Harry for good, nice to see you. Yatzim Nunez, 5% on 2-week options. Sure, Dave, why not? Did you come earlier today? No, I didn't. Herman, Matthew, nice to see you. No way this works. Thank you, Lavi. Lavi, if it doesn't, oh, wait a minute, Lavi, it doesn't. TP, thank you. I love it when people are so positive. Yes, margin call. I got a margin call yesterday. I can't margin call. All right, Angelo. Watch how fast it falls apart. Thank you there, Angelo. Richard, writing options on an earnings week is very risky. I see it all the time. Juicy premiums attempting. Thank you, Richard. Yes, we try to avoid certain stocks during earnings, certain ones, because some of them, the earnings just doesn't make any difference. Some earnings kind of overreact to the situation. Those four dangerous words. We missed our target. That's it. We missed our target. Those 4 words can mess up a lot. Let's get out of this. I just wanted to show you that. Well, I took a quick little pee break. All right, there we go. So, I see that one. Got it. Panic selling, sell everything. Warren Buffett. Yeah. Pete, nice to see you. Francis, how you doing? Why not swing long calls instead of shares? Okay, Stock Banger, I agree with you 100%. You can make a lot more money swinging long calls instead of doing shares. Unfortunately, that requires more time, more effort. It's always going to be a trade balance. Always. Okay? Sit in front of your computer, do swing trades, you can make more than 1% per week. That's not my intention. I have no desire to sit in front of the computer all day. I want to jump in, I want to jump out, and I want to get my 1% every week, 5 or 10 minutes. You know, we could do a challenge if you like, and I'm not doing it on rate of return. I would do it rate of return opposed to the amount of time and effort invested. So it would be very, very challenging to figure that one out because you would have to be isolated from all electronic devices so that you couldn't do research on the side while you're waiting for your theory to show up. My theory is pretty simple. It's a dividend king, a dividend aristocrat, a dividend champion, a dividend contender. It's one of those, which means somebody already did all the work for me. Somebody already figured out that this company or these companies are consistently profitable. So I don't have to do any research there. And then the easy strategy with where is it going? 5 simple questions, up, down, up. Well, that's easy to see. And then I jump into one of the easiest trades. That's the covered call that gives me over 1% every single week. So if I'm averaging 1.4% every single week with less than 1 hour of my time, that's a huge difference. Because you're absolutely right. If I sat in front of my computer and did swing trades, I could make a hell of a lot more money. That's not what I'm looking for. I'm not looking for a new job. I'm just looking for, you like that, Nick? I'm just looking for a simple, safe, predictable way for me to jump in, jump out, and create enough income so I can live comfortably. That's all. Okay? Stock Banger! That's 1,700% on $1 move swing trading call options. Well, that's pretty damn good. Thank you, Jolly. I like that one. Where are we? Where were we? All right. Sorry. I got 1, 2, 3, 4, 5, 6, 7, 8, 9 cameras. I got 9 cameras, which means I got 1, 2, 3, 4, 5, 6, 7, 8. 8 screens in front of me where I have questions. So getting to all of them is not the easiest thing in the world. So I'm trying to get most of these questions. How many other strategies do you run? About 3 or 4. 3 or 4. Okay, we came up with a new strategy today. We'll be posting that and creating a whole new live session for that one. It's a lot easier for those people who don't have a lot of money. Because I do have to admit, the strategy I'm teaching you here tonight does require you to buy hundreds of shares at a time. But what if you don't have that? What if you only have a couple of bucks here, a couple of bucks there? Tux the Demon. Okay, Tux the Demon. Nice of you to show up. I've been trying to catch your videos for a while. Got that one, KHC. We'll take a look at KHC, Brader the Trader, in a second. Miss Law, how you doing today? Florida Dad Mode. Megan. Clembuilt. Okay. Sacked Hockey. MPLX. What the hell is that? MPLX. That's a no. Okay, Sacked Hockey, you're new here. Okay? I do not do monthly options. August, September, October, December, January. Those are months of the year. Now, we all know there's only 12 months in the year, so if I can trade it once a month, what am I making? I want once a week, because that's 52 times a year. It gives me a better rate of return. Okay? De Prague, how much money would you suggest a starting investor need using your strategy? Now, I know absolutely nothing about you, so I could not give you an answer to that question. But to let you know where I stand. Okay, I started off with 12,500. That was 30 years ago. I took out a second mortgage on my house. The wife wasn't happy. I slept on the couch for about a week. Some of you people don't understand what that means. But yeah, I started out with 12,500. That was 30 years ago. Now I have 95% of all my money invested at all times because I believe in the economy. I believe in Home Depot, Lowe's, Bank of America. I'm drawing a blank. Walmart, Seagate, Procter and Gamble, Lowe's, Wells Fargo, a bunch of them. Okay. I told my girlfriend I love 30-day buttons. Okay. IBM Stress Solution wants to take a look at IBM. Wait a minute. Netflix. Oh, multiplex. No, it's a monthly. Yeah, no, thank you. Not even going to bother with that one. IBM. Okay. IBM. Who came up with this one? Who came up? Stress Solutions. Okay. What's going on here? The top, the bottom, where was it? Where is it? Up, down, up, down, up. What's going on? 233, the 230, 250s, 480. Well, the numbers look good, but what's going on here? Does it make sense to jump into IBM? Well, look at this big drop right here. I want to zoom in and show you that because stocks have a tendency to fill gaps. Low battery. I got a low battery. On my mind, I got a low battery. All the time, I got a low battery. Plug me in, I got a low battery. Let's sing it again. Oh, wow, I'm a poet. I didn't even know it. All right, so those are all done. Good. All right, fine. All right, so here we go. The top, the bottom, where was it? Where is it? Look at this. Up, down, big, huge drop. Finds the bottom here. Now she's going up. You can clearly see that is going to fill. But how long is it going to take? It's going to go up, pull back. It's going to go up, pull back, up, pull back, and then it will finally fill. How long is it going to take? Does it really matter? I mean, think about it. I'm 62. I figure I got another 20, 30 years to go. So if I'm going to buy IBM, this right here doesn't bother me. This doesn't bother me. What am I collecting per share? Well, at the moment, I'm collecting $4.80 per share. That's over 1% for this week. So think about it this way. If you're going to buy something, if you're going to make an investment, and it's going to be a weekly cash flowing asset, just think of it differently. I'm not buying stocks in IBM. I'm creating a weekly cash flowing asset specifically designed to give me money every single week. The only bad part about it is I don't know how much money I'm getting every single week. But I do know that it's over 1%. And that's the question you need to ask yourself. You got, okay, I make $30,000 in just 1 week. If you're interested, then message me. Well, good for you. You know, it all depends on what you do. How long does it take you to get to that knowledge level? And what does the investment require? How much time per day are you putting into it? What point of life's journey are you? I'm at the tail end. I'm at the golden years. Okay, I did my formative years. I did my high school years. I did my learning years. I did my family years. Now I'm in my retirement years. So the money that I've made has to last me for the rest of my days unless I want to go out and get a new job, which I don't. Okay, I put in 5 decades. That's 50 years for you new people who don't understand the, intricate. Never mind. All right, so IBM. Let's do it. No, let's not, because I'm not quite sure what's going on here. Need a little bit more air. Let's do IBM. All right, get rid of this. Change this to cover call. Wait a minute, I don't want to get rid of that. I want to do that. Oops. All right, there we go. All right, covered call. There it is. The one. Where are we? We're at 132.50. There it is. One covered call. There it is. A quick snippet. Here we go. Quick snip. Snip, snip, quick, quick. There we go. Snip it. And there you have it. And there that is. And we're going to save this as number 4 for the evening. Yay! 8/20/2026. Number 4. IBM. Yay! What kind of rate of return are we getting for IBM? All right, calculator, if you will, calculator. IBM, 232s, 403, 22,000. What is the rate of return? All right, let's do this. Profit, 403. Right there. Profit, 403. Divided by the investment, 22,847. Okay. 22,847. Grand total of 1.76. 1.76. So 1.75% for 1 week. Do I really need to go over the math again? 1% a week is more than 50% a year. Okay, more than 1% a week is more than 60, 70% a year. If it makes sense to you. All right, let's do this. 1.75. 1.75. All right, 1.75 for 1 week. All right, let's get this. La 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 la. Back to where we were, right there, and this is IBM. IBM. And IBM looks a little bit like this. One covered call, IBM, 28 August 26. The 232.50 call option. We're at 233.82 at the moment. All she's got to do is stay above 232.50. Well, she's at 233.82. That should be relatively easy. 403 is the profit. 22,847 is the investment for this particular asset. Weekly cash flowing asset. That's the way I'm looking at it. All right, so what would I say? 1.3. All right, 1.75. 1.75. 1.75. That's number 4. One more to go. One more. Here we go, yo. Here we go, yo. What do we got? Who's next? Okay, got all those. Wait. Echo on that one. Got that. Can you discuss the new strategy more? Jeremy, give me a couple of minutes. How often do you check if a dividend stock has changed from a monthly to a weekly? Anytime I pull up a stock. Okay? All right. That's an interesting question, Matrix. Let's touch on that for a second. He wants to know how often do I check and see if it's a weekly as opposed to a monthly. Sit tight. I got an answer for you. Okay. All right. Matrix, you see this right here? Right here is what is called an EX dividend calendar. An EX dividend calendar allows me to track all the stocks that I like. Well, there's 11,500 and whatever stocks available this week. We check every Sunday. We do. Every Sunday we check. How many new companies have they added? We've seen it go from 11,000 up to 11,500 and whatever. So that being said, how do we know when a stock is a weekly or a monthly? Well, number one, if they consistently increase their dividends, they're up on the chart. Or not on the chart, in the calendar. So we are here, the 20th, right there. So tomorrow we have Walmart and Sherwin-Williams paying a dividend. So if I go to trade, put in Walmart, WMT, I want to buy me some WMT. And what do I find? First thing I find, as always, the high, the low, where was it, where is it, up, down, up, big drop. Okay, that's what I'm seeing. That's the first thing, the first 2 to 5 seconds. Great. Well, the next 2 to 5 seconds go over there to the numbers. What am I buying the stock for? What are the options looking like? And then when I look at the options, the first thing I see is this right here. August 21, that's tomorrow. 28 August, that's next Friday. 4 September, 2 Fridays away, 11 September, 18 September, so on and so forth. So as soon as I take a look at the stock in the market watch, in the calendar, okay, those are the only stocks I'm looking at this week. That's it. I'm not looking at these. I'm not looking at these. I'm looking at the ones for this week only. And when I look at the ones for this week only, very first thing I'm going to see, is it a weekly or is it a monthly? That's it. Is it a weekly or is it a monthly? And I don't do monthlies because the numbers never work in my favor. Sorry. Next question. Brady the Trader wants to take a look at Kraft Heinz ketchup. Uh-oh, back up here. KHC. Ooh, that looks nice, doesn't it? Your eyes should automatically, anytime you look at a chart, automatically your eyes should look out 5 things. The high, the low, where was it? Where is it? What direction is the money flowing? Down, up, down, up. That is the last 30 days. Yesterday, the day before, last week, the week before. It gives me a good idea of where the stock is going next. It's not guaranteed. There's only 4 guarantees in life. And I'm pretty sure most of you know 2 of them. Okay, so the last 30 days. Pretty plain to see. Same 5 things. High, low, where was it? Where is it? Where is the money flowing? That's easy to see. Up, down, up again. 25.50. The 25.50s are going for 35. That's a hell yeah, because it's a dividend king. What's a dividend king, you ask? Well, a dividend king is a company that's increased their profits for 5 decades or more. 10, 20, 30, 40, 50 years or more of increased profits. It either makes sense or it doesn't. You either like it or you don't. That's it. All right, so this will be number 5, Kraft Heinz ketchup. It's been in business for over 100 years, over 5 decades, increased profits. How the hell can you say no? All right, we're going to reboot on this one over here. Any good questions? All charts look the same. Thank you, Joba. Sent to drums. Thank you for that. That was nice. I like whatever's making money. Thank you there, Josh. Tyson, catch you in a minute. Thoughts on NBiz. All right, blah, blah, blah. Analysis. What is the program that you're using, Kristen? It's not a program. It's actually a trading platform from Charles Schwab. Okay. Could you mirror the Bollinger Bands against that? Why? The Waltons are selling. Cool beans. All right, got it. NBiz. We took a look at that one already. Walmart was not a yes. Walmart has made 100% since 2000. Whoop-a-dee-doo. Steve. All right, let's see if I can clarify something with you, Mr. Steve, if it's okay. Using the numbers you just gave me, Walmart has 100% since 2000. 26 years to double? That's basically what you're saying. 100% since 2000. That's only double in 26 years. I'm talking 50% per year, and that would be 100% in 2 years, not 26. KMB, Which ones? Blah, 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 blah. All right, all right, all right. Breaking down. Da, 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 da. All right. Are you hoping to have expire worthless? Of course. All right. So that being said, we did that one. Parker, do you ever trade just to capture dividends if it's within 7 to 19 days? No. There's a little bit more to it than that, Parker. Is it a good company? Are they consistently profitable? What does the future look like for them? What does the past look like for them? Have they been consistently profitable? The questions are relatively easy, and it's all built into the program. I mean, think about it. If I'm only doing Dividend Kings, that means they're consistently profitable for the past 5 decades. Dividend Aristocrats, past 25 years. GPC, absolutely, don't do it. So let's do this. Let's reboot just for the fun of it. See what we can kick up a second half. Come on. Try it one more time. One more time. If we try. There we go. There we go. All right, let's try this over again. All righty. Next. Marinail. All right, Marinail, how you doing? Jay. Okay. What? Oh, where is the dividend calendar? Matrix. The dividend calendar is on Think or Swim. All right. Right over here, up at the top, you have monitor, trade, analyze, scan, market watch. Right there under the market watch. Bring your cursor up there, window pops up. Quotes, alerts, visualize, finance rates, calendar. Right there. There it is, right there under the market watch. Okay? Thank you there, Walter. Okay, next. CAG. Ooh, CAG. Hydrographics. Good evening, CAG. Blah, 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 blah. Okay, cool. What do we have over? 99 questions. Holy cow. You took my pen. That figures. Thank you, that Taquino. Nice guy. All right, let's keep on going. Angel, nice to see you, Prag. What's going on? It's 2 guys. Got it. How do I get on the email list? Parker, DM me. Parker, you are on the 10-Minute Trader on TikTok. Just DM me. Send me a DM. Or you can go right to the kidding put Philip died. Kidding, but Philip died in 1873. I have no idea what that means, but okay. The email list, yeah, DM me or sign up right on the website. Dum da da dum 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 dee dum dum. Steve wants to take a look at BE. BE, isn't that Bloom Energy? It is Bloom Energy. Unfortunately, Steve, check this out. Top, bottom, where was it? Where is it? Look at this. Up, down, down. Sorry, Mr. Steve, not this time. Now, don't get me wrong. It's not that I don't like it. It's just not this time. Could you please walk us through a strategy on using the dividend calendar? JD, didn't we just do that? All right, dividend calendar. You ready? Whoops, get rid of earnings. We don't want earnings. All right, Mr. Steve, are you checking out? Oh, sorry, is it JD? JD, are you ready? August 2026. We are on the 20th. All right, 2 weeks from today. We have Mickey D's. We have Pepsi, Kimberly-Clark, GPC, Armor, all those. So, the 20th, I want to go 2 weeks from today. Lennar, Kimberly-Clark, Pepsi. Let's take a look at those. Get out of there. Okay, back to trade. Lennar would be LIN. There it is. That's a no. That's a monthly. What the hell's it doing on my chart? What was the other one? Pepsi. There you go. Pepsi. High, low, was, is, down, up. down, up, easy to see. 142 is going for 159. You saw it in the calendar, now you saw it on the chart. Let's zoom in. Last 90 days, looking for the exact same thing. High, low, where was it? Where is it? Down, up, that's easy to see. Last 30 days, does it get any clearer than that? I'm pretty sure it does. The top, the bottom, where was it? Where is it? Up, down, up, easy to see. Here's the top, here's the bottom, right there, going up. The 142s, 159, that's over 1%, right? The stock, 142. The premium, 159. 142 is the stock price. 159 is the option value. Well, 159 is more than 1% of 142, so that's a yes. So, simply done. Get rid of that. Change from single option to covered call option or covered stock, buy right, whatever you want to call it. But it's still the same. Buying 100 shares, selling one contract. Here it is. Pepsi, symbol. How many? Okay, buy, sell. Buy 100 shares. Pepsi. Sell one contract. 28 August. That's next Friday. The 142 strike price. The call option. The price right there. The time in force. TIF, time in force. 1 day means I want to jump in first thing tomorrow morning and I want to sell that as soon as possible. So let's see what the numbers look like. Right there. Here we go. Read it out loud. Make sure it makes sense. One covered call. Pepsi. 100. That's the weeklies. 28 August 26. That means the option's going to expire next Friday. The 142 call option. That means that's my selling price. The 142 call option. Well, what's my purchase price? Well, that's ask 142.08. So I'm actually buying it at 142.08, selling it for less, 142, and still walking away with a profit. Break even, 140. Max profit, $200. Cost of trade, including commissions and fees, $14,000. If I was going to do it on margin, it would be $6,896. So, to find my rate of return, I take max profit, 200, divided by the cost of the trade, including commissions and fees, and that will give me my rate of return for 1 week. 200 is the profit. Cost of the trade, including commissions and fees, 14,000. Gives me a rate of return of 1.42%. 1.42 for 1 week. Now, we all know there's 52 weeks in a year. So if I'm getting 1.42% for 1 week, and if I can do that every single week, because there's over 10,000 different companies, 11,500 and whatever the number is, every single week. I'm looking for weekly cash flow. Thank you, Robert. You're right. Lenar is L-E-N. That's my fault. I was looking at L-I-N. That was one on the chart. My fault. So, there you go. Right from the dividend calendar, there you have it. All right, so next, what are we doing next? See, Steve wants to take a look at Celsius. Let's get rid of that. Did we find our 5 already? You know, we can use Pepsi as 5. I think I will. Or it could be number 6. I don't know. Let's try this. What did I say it was? 1.4. Okay, I'm going to save that one. 1.4 for Pepsi. Pepsi! All right. Hold on. If I'm going to save this, I got to save it the right way. All right, right over there. Do that. come down to their snippet. Got a snippet so I can save it and email it. So whoever's on the email list, they get to get this in their email. Watch list. There we go. And save. All right. 8, 20, 20, 26. Number 5. Okay, that's it. That's number 5. All righty. Get rid of that. Get rid of that. Go back to that. Let's take care of this. And what did we just say this was? Pepsi. P-E-P. Pepsi. Yay! Pepsi. There we go. One covered call. Pepsi. 28 August. That's 1 week away. 8 days. Pepsi, the 142 call option. We're currently at 142.08. So think about it. Buying it, selling it for less than I paid for it, and still walk away with a profit. How can you get on my email list? Go to the website, The10MinuteTrader. You should be able to sign up right there. 200 is the profit. 14,000 is the investment. For what was that rate of return again? Hold on. There it is right there, 1.42. 1.42. 1.42. Whatever. Okay, so 1.42% for Pepsi, if you like Pepsi. Now, this is one of those things you got to keep in the back of your mind. 1.42. Pepsi. So keep it in the back of your mind. It either makes sense or it doesn't make sense. You either like the company or you don't like the company. Matrix. We haven't saved KHC, have we? Did we save KHC? Let's find out. Uno momento, por favor. Pepsi, IBM, C-Test. No, we didn't. We didn't save that one. All right, well, let's... Number 6. Why not? Why not do number 6? Why the hell not? Which one was that? KHC? Kraft Heinz. KHC. Oh, yeah. Hell yeah. The 2950s. Yeah. Sorry about that. I should have saved this one. Covered stock. It's at 2550s. One covered call. There it is. There you go. Snip it. Snip it good. Snap that clip. All right. Watch list. All the way down there to the bottom. And we're going to save this. Is number 6. Come on. There's only supposed to be 5. Snuck that one by me, didn't you? 8, 20, 20. 6, number 6. Are you kidding me? Snuck that one through, didn't you? All right, get rid of that one. Get rid of that. Get rid of that. Go back to that. There we go. Uh-oh, 9:45. Phone call. Who's on the line? All right, let's do this. Who? Someone's knocking at the door. Somebody's ringing the bell. 727 5 4 3 9 4 1 8. Phone line's open. All right. That being said, who do we got? Who do we got? Who do we got? All right. TSLL, LRK, SPYY. Now, see, TSLL I can get behind. Let's do this one. TSLL. Because I actually have some of that. Interesting. Start to pull back today. Jeng, did you see that? Right there. Nice movement. Okay, she's at 15, drops down, shoots up. Now she's pulling back down again. Why does that look like that? Not today. Sorry. Lennar is L-E-N. You're correct. Lennar, L-E-N. No, for Lennar. What's going on there? Look at this. Up, sideways, going nowhere, really. LRK. LRK. LARK. Sorry, LRAK has no dividends. I mean, sorry, no options. No, thank you. That was quick, wasn't it? Okay, done. All these questions. Jang, SYY. That's Cisco, SYY. It's a monthly, dude. Sorry. August, September, October, November, December, January, February. Those are months of the year.
Unknown caller.
Chicago! What's happening, Chicago? How are you doing today?
Doing okay, James.
Outstanding. How can I help you today?
This is Little Man.
Murph Man, how you doing? You've been hanging out with me for the past couple of weeks.
Yes, I have, and I really enjoy your program.
Well, it's a little disturbing. You guys have nothing better to do in Chicago than to listen to me. What do you got, brother?
Here's a question I have, James. Is it possible to collect the premium and the dividend within the same week on a cover call?
Yes, you can, but you got to get the timing right. I'll show you something here for a second. Hold on. Let's pull up one. Let's get rid of this. Let's go back to Market Watch. Okay, so hypothetically speaking, right? Today's the 20th. So look at Nextera. Okay, NEE, Nextera. It has it on Friday, next Friday. So if I buy this on Monday, sell the covered call on Monday, right? I get the premium. Then the option expires on Saturday. Most people think they expire on Friday. They don't. We lose the ability to do anything 3:59 p.m. on Friday because the market closes at 4 to us. But options don't expire until Saturday. So guess what that means? If you own NEE before the 28th, you are entitled to the dividend because there's 4 dates to remember. The first date, let's do this. All right, the first date is the announcement date. There's 4 dates. First date's the announcement date. That says, congratulations, Nextera Energy is giving out blah, 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 a dividend on which day, blah, 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 blah. Whatever. It's the announcement date. You're just telling what you're getting when you're getting it. That's it. The second date is called the EX dividend date. That's represented by these little tiny green dots. Each green dot represents a company that's getting ready to pay a dividend, the EX dividend date. So if you buy the stock before the EX dividend date, you're entitled to the dividend. Okay? Date of record. Whoever owns the stock on the date of record is entitled to the dividend. So you buy it before the EX date, carry it through the date of record, and then on Saturday when the option expires, what's going to happen is there's only 2 people that can buy the stock from you. One is the person who bought the option. So if they bought the option, they have the right to take that stock away from you before the 28th, because after the 28th, they can no longer do that. But the market maker can take it from you on Saturday. So you got to play the cards right, the numbers got to work, and everything's got to be in line for you to collect the dividend and the premium in 1 week. But you can do it because you got SPGI, Johnson & Johnson, 3M, ATO. You can buy any one of these on Monday morning. And if you still have them on Friday, you get the dividend and the premium. That make sense? Uh-oh, I think he disappeared on me. Hello? Nope, I guess he's gone. All right, that opens up the phone line for someone else. All right, that being said, where are we? Holy cow, we got 9 minutes left. Let's go through some of these questions. All right, okay.
Unknown caller.
Jersey, what's happening? Jersey, what's going on? How you doing? Hello? Hello?
Hey, James, man, I don't know what happened, but I just want to thank you, James.
All right, no problem. Let me take this other call. Hello, hello.
Oh, can you hear me?
Yep, I can hear you. Who am I talking with?
Sorry. Yeah, it's Rich from, I wanted to see if you would entertain expanding on the covered call and in earnings week, the same week as earnings.
Okay.
I had some thoughts about that because I've been listening to you for about 5 months, doing a lot of your observations. I know they're all observations, but in my observation, writing a call in an earnings kind of negates a lot of what you're teaching because the simple, safe, predictable is removed when it's in the earnings because you really don't know what's going to happen. You know the company, if it's dividend king, a dividend aristocrat, all the things that you talk about. I mean, I listen to you every night, so I know exactly what you mean. But I just feel like when there's earnings in that week, it kind of negates what's going to happen for them. Just that 1 week. After that, you go right back to your 3 days up, all of that. Just your thoughts on that, if you ever thought about that way, because like Walmart this week, AAP this week. I mean, like these things got hit hard, and nobody would ever know that. I mean, just wouldn't know. Okay. It's only because it was earnings.
Okay. You done? My turn?
That's it.
All right. So my turn. Okay. So the question was, it's a great question. I get it all the time. Do you still do a covered call during earnings weeks? Well, I've been doing this for quite a while, and let me tell you what I found. What I have found, there's only a few companies that are really subjected to the earnings call, more so than others. Last year, we saw Harley Davidson get a negative earnings report, and then the stock went up. And then we saw a positive earnings report where the stock went down. So the earnings report only affects some companies and not all of them. But I'll refer you back to rule number 1. Do you remember rule number 1?
Well, yeah, do you like the company?
No, never buy anything unless you plan on holding it long term.
Same thing, yeah, same thing.
Well,
I
so
meant that, but yes.
okay,
yes.
but the earnings shouldn't have anything to do with whether or not you like the company.
Yeah, but yes, I agree with that, absolutely, and yes, and I do that too, and I didn't do that a couple times, and I did end up owning it, and it did burn me, and that reminded me, the little voice in my head, your voice, telling me that, next time, dummy, don't buy something that you don't want to hold long term, so I'm with you. But this is my point, though, with the call for an earnings week.
Yep.
There's no upside on the call. There's zero upside in it because you already made your price. Like if it's $92 and you're selling it for $92 and you bought it for $92 and you're going to make $100, that's it. Doesn't matter. That's it. If you're a day trader, I could see earnings week being extremely important because heck, it might pop and then you're making all kinds of money. But I was just thinking that skipping that 1 week out of 52 or whatever, I know there's more earnings in a company, but just seems to me like it's a safer play just for that 1 week skipping it. That's just my observation. That's just thrown out there.
I'm going to agree with you 100%. I am. But I'm going to reiterate what you said. In the long term, it doesn't really matter. But as a day trader, it does remember. You remember saying that?
Oh, yeah.
So as a day trader, that is hugely important because you're doing it every single day. But in the long term, it doesn't really matter because you like the stock anyway. And if you're getting you 1% this week, well, great. Earnings reports, yeah, if you want to take a look at them because you can see them on the same chart. Just over here, you got dividends and then you get the earnings. So here's ExxonMobil. Where's Exxon's mobile dividend? I don't know. Let's make it easier. Let's get rid of everything else. All right, and then we'll put in just ExxonMobil, XOM. So if I want to do ExxonMobil, I get the dividend here, but there's no earnings report at all this month. So you said Walmart, so let's put in Walmart. WMT, yep, I get that, I get it, okay. Walmart, wait a minute, I'm not done. Walmart had its earnings today. The dividend is Friday. So if I bought it on Monday, I could, you know what? Let's take a look at what was the premium. What was the stock on Monday? Let's take a quick look. Chart. Okay, Monday. All right, so today's Thursday, Wednesday, Tuesday, Monday. So Monday's right here. Okay, so it went up, it came down, it wouldn't have been on the list because she's going sideways and then down on Friday. So I wouldn't have jumped into Walmart this week just by looking at the chart, because when you have your high right here, and then she starts coming down on Friday, that kind of knocks out a contention for Monday.
Well, okay, so maybe that's a bad example. AAP then.
All right. I'm
following.
Okay, no. I hear what you're saying. Let's look at AAP, Advanced Auto Parts.
And we did that on Monday.
Yeah, I know. I get it.
It looked good. It looked good. It did for
Yeah.
everybody. I mean.
Okay, so there it is, Advanced Auto Parts. Let's take a look at that chart. Trade. Go over here. AAP. Okay, let's go last 30 days. Let's get right there. Let's get rid of today. Let's get rid of Wednesday, Tuesday, Monday. Okay, so this is what Advanced Auto Parts looked like on Monday. Let's get rid of this. Okay, so this is what the chart looked on Monday. The high was here at 61. The bottom is here at 51. Shoots up, pulls back, shoots up, pulls back. New bottom right there at 52 on Wednesday, Thursday, Friday, and Monday. Well, that right there is opportunity to jump in. Oh, great. So we jump in, we get our 1 and 2%, whatever the hell it was. And then are you okay with it or are you not okay with it? That's Monday. Well, today's Thursday. Did we know this was going to happen? Those 4 little words. You know what those 4 little words are? We missed our target. That's it. 4 little words. We missed our target. What happened? Big drop.
Right. And if we didn't do that this week, and maybe we did it another week, any other of the weeks, but just because we don't want to hear those words, because we're trying to do safe and predictable, and you can't be predictable when you don't know if someone's going to say we missed our target. That's all. That was just
all right. Yeah, but all right. So I want to show you something, and it's really, really hugely important. Okay, this is for everybody. It has exactly what he has to do with. When the market maker, whoever, gets those 4 little words, we missed our target, what does that mean? Well, we know what it means to us. It means we're giving the ability for the market maker to do whatever he wants. So let me give you, for instance, and you ever hear that old saying, follow the money?
Yeah.
Do you remember that? I'm going to show you something. I'm not sure if you've ever seen this before. The bid and the ask. The difference between the bid and the ask, that goes directly to the market maker, the bid and the ask. And it's usually 1 to 2 cents. So let's use just 1 cent, okay, for argument's sake. Today, 16 million shares traded. But what traded on a normal basis? To find that out, we go to here. Your average basis is right here, okay, way down here. An average 1.9 million. Shares per day. So let's do the math. 1.9 million shares, okay? And the market maker makes 1 penny multiplied by 0.01. That comes to $19,000 for 1 day to the market maker on an average day. Because average, that's his average trade, 1.9 million, or 1.9 million shares. So those 4 little words, what did they actually mean? Well, today, 16.8 million shares traded. So let's save this number. Hold on. 16.8 million shares multiplied by 0.01, 1 penny per share. So on average, he makes how much? 160. Okay, 19,000. But today he made 168,000. Do you see what those 4 little words mean? Now, do those 4 little words, we missed our target, affect the company? Did the CEO pick up the phone and said, hey, we missed our target, lay off 2,000 people? No, he didn't do that. Why? because it doesn't mean anything to the company itself. It only means something, in my humble opinion, to the market maker. We missed our target. Those four little words just went from 19,000 for one day to 168,000 for one day. So if you follow the money, we missed our target. What does it mean, and who does it mean that to? Who made the most money on that day? Most likely the market maker. Because
I got you.
Because you got 5 numbers that are important every single day, and only one of those numbers is controlled by one person, and that's the
When
market.
you say market maker, you've said that before, and I'm glad I'm talking to you now live. And what does that exactly mean? I mean, maybe everyone else knows and I just don't, but is that one is there like some kind of a broker on the other end of these options that are
All right,
making them?
I'm gonna.
Is the market maker?
All right. Do you remember back in English class, back in high school? Do you know what a metaphor is? It's
Yes,
a. It's
that's
a.
what I was going to ask you.
It's a way. All right. Let me explain it to you with using a metaphor that is easy to understand. Okay. What's the name of the corner store down the street? Quick Stop, Quickie Mart, 7-Eleven, Circle K. What is it?
By me, it's a mini mart.
Mini Mart. Okay, great. The guy who owns the Mini Mart, he buys a gallon of milk from the farmer, which you and I can't buy from the farmer because we're not registered. He buys a gallon of milk for $3 and he sells it to you for $3.75. How much does he make? 75 cents for each gallon of milk he sells, correct?
Yes.
How much does the market maker make for each share that trades through his little fingers? He makes 1 penny per share. What did he make today? 168,000. What did he make yesterday? 19,000. What's the difference between the two? 4 little words. We missed our target. So remember I said there's 5 numbers every single day?
Yes.
The open, close, high, low, volume. Those are the 5 numbers. So out of those 5 numbers, we, buyers and sellers, we control how many shares are bought and sold. We control how high we want to go. We control how low it goes. We control the last trade of the day. What we don't control is the opening price of the day. Only one person has that power, and that is the market maker. He wakes up in the morning and he says, you know what? My bitch ass wife left me, took my kids, left with my best friend. I have a sucky day. I'm dropping this stock down to whatever. He could do that.
I got you.
Do you see what I mean?
All right. Yeah,
So-
thank you. Very insightful.
Yeah, so if you look at it that way, we missed our target. What does it mean? Well, to us, if we worked there, did we get a phone call from the CEO saying, hey, John, Jim, take a couple of days off. We missed our target. We didn't make as much money as we thought. No. He doesn't even call us up and say, hey, we missed our target. Get your ass to work. Make some more shit. It's the market maker who manipulates the market with that one little tiny bit of information. So what do you do with the information? You got this big ass drop. Now you're way down here. I like the company. Great. Well, after his wife calls and apologizes, sorry, we were just going to my mother's house and I forgot to tell you, blah blah blah. Everybody's happy, and then in a couple of days it goes right back to where it was before.
Yeah, no, I got you. I think we all have to have our own journey, right? Obviously, and like you said, different ages, and we're all different places. But I think for me, I would probably just try to continue to stay away from earnings weeks, even though I know that they're very, very good premiums, and some of the best premiums I've ever seen is earnings weeks.
Yeah, but think
of your callers, your people that give you, in the chats and stuff, like, man, they're 4, 5, 6, 7%. They're amazing. And then I always look at his earnings. I'm like, oh, of course it's amazing. It's earnings.
Well, look at it this way. If you like the stock anyway and you want to buy it anyway, why not buy it during earnings week? You get a nice fat premium. You buy it, you get the big fat premium. You wanted to buy the stock anyway. You're going to collect the dividend when it comes out. And if you pick right, well, the dividend increases every year. And you have the ability to get a covered call premium every single week. So you got to take the good with the bad. You think it's always going to be good? No. You think it's always going to be bad? No. It is what it is.
That's true.
Yeah,
Valid point.
Yeah, if you play Monopoly, you know eventually you're going to go to jail eventually. Because there's only what 70 squares on that board. You can't go around every single time and miss that one square every single time. Eventually, you're going to land on it. It's the same thing with stocks. You're going to buy something, it's going to drop. You're going to buy something, it's going to shoot to the roof. It's just all part of the game. How you play, how you like you said, your journey is different than mine.
Yes. Cool. Thank you. Thanks for your time.
You're welcome. Thanks for calling in.
Thanks for the insight, man.
Yeah.
Good stuff. Thank you.
Yeah, call in every once in a while. Let me know how you're doing.
All right. Thank you. Take care, dude.
You're welcome. Stress solution for Hewlett Packard. Do you put away roughly 30% for taxes? No, I don't. Now, I'm not going to tell you what to do with your account, but here's the way I look at it. If I have my account in my own personal name, I am subjected to whatever the taxes that personal name is. That is the absolute highest tax there is in your own personal name. Now, if you put your account, your trading account, into your corporation's name, you pay the corporate level taxes. Okay? If you put your trading into a corporation in a state where there's no corporate taxes, well, guess what? There's no corporate taxes. If you live in a state where there's no personal taxes, well, there's no personal taxes. If you put your trading into a trust or wait a minute, unincorporated business trust, you can grow and grow and grow your account and pay zero in taxes until you take the money out. Interesting thing, you can build up your account, build, borrow against it, never have to take money out, never have to pay taxes. It all depends on how you set up your account before you even start. Or, once you get it set up, you can move everything over. If you want to avoid taxes, MSTY, Benjamin, we went over MSTY earlier, dude. Ain't nothing you're going to tell me about a stock that pays a $20 dividend. It's down to 18 cents. Ain't no way in God's green earth am I ever going to be looking into Misty. Sorry, the numbers are just horrible. So no, and hell no. Sorry. Not really, but you know what I mean. Okay, it's past 10 o'clock. Do we have any other questions that really... okay. Do you have a book I can recommend? Sure, book I can recommend. Wall Street Money Machine by Wade Cook. I don't get anything for that, but it was a good book. Simple, easy to read. We haven't saved KHC. Yes, we did. Okay. Let's keep on going. I think we're done. Let's see what else we have for questions. Okay, we'll look at Celsius. Did that. David, what is the acronym? Stands for CTAF. I have no idea. All right, Steve, we looked at those. Thank you, Steve. David, 1, never buy anything that's not on your list. We missed our target. Thank you, David. He was right. You have speaking about 5 rules to your 9-year-old. Absolutely, David. Davina, how are you? What do you think about Disney? You have a put on Disney? Let's check this out. Hold on. Get out of there. Get over to here. Get over to here. Disney. D-I-S. Ooh, you had a put on Disney? Now, did you buy the put or did you sell the put? Because you said, I have a put on Disney. Did you sell it or did you buy it? That's always a big question. Juan, can I ask you a question? Absolutely. I bought a put on MU, strike 965, and now it's rising. My contract expires on Monday. Okay. Now, your question is easier to read than hers. Micron, 974, and you bought the 965. Why? Okay, so buying a put means you can force someone to buy it from you at a certain price. But if you don't own it, how can you sell someone something you don't own? Buying a put means you're buying the opportunity to sell someone the stock at a certain price, which means you have to own it for less than 965 from the buy. And then why the hell would they buy it at 965? Oh yeah, they would buy it at 965. 965's down here. Is that right? 965? Yeah. All right, so where's the 965? Expires on Monday. Monday. Right there. There it is. 965, you say. Gonna need my glasses for this one. 965. Holy cow. Okay. 965 right there. Okay, so the put right now, the bid is 1630 and the ask is 1770. So you bought it. So you can force someone to buy it from you at 965. It's at 974. Why would you sell someone a stock at 965? That makes no sense to me. I don't like doing puts because they can be confusing. Buying them is one thing, means you can force someone to buy it. However, the sweet point of return with options is 18%. Well, alrighty then. You're making 18%. Good for you. I make 1%. I am averaging 1.4% per week. That's over 65% per year. But you take your 18, I'll take my 65. Okay? There you go, pumpkin. All right, so that being said, I have no idea why you would buy a 965. Because you're forcing someone to buy it from you at 965. It's at 974. Anyway. What do you mean? All right, where were we? We missed our target. Yep. Thinking about Disney, we did that one. Following IBM, got that one. Roll. Yep, got that one. What is the strategy in this case? I have no idea. The strategy is dividend investing for weekly cash flow. Divina going to expire worthless. Just sell, buy more complex. Okay, got it. Sell 103. I'm lost in this conversation. Don't. Yeah. There we go. Steven, thank you for that. Charges the commissions by markup and markdown. Markup or markdown. I'm not quite sure, Mike, what that means. PDM. Let's look at that next one. Principal dealer markup. PDM. Okay. Stress solution. You said you would talk about the new strategy. Oh, yeah, that's right. Thank you about that new strategy. Okay, hold on. Zeg, nice to see that. Crafty, how do you have a loser? Yeah, I had 2 losers this year. That was it. Because I wasn't paying attention and right by me. Invest in Bloom or Intuit? No. How do you find your edge? Saito, how do I find my edge? It's simple. By knowing when the stock is going to pay its dividend, you have an idea of when the stock moves because it usually goes up just before the dividend date. So knowing when a stock is going to move gives you a little bit of an edge. Then if you combine that little bit of an edge with a strategy that is so safe, is so simple, and 2 out of 3 times you're automatically going to win. Because stocks only go 3 different directions, up, down, or nowhere. So if you do a strategy where if it goes up, you make your money. If it stays the exact same, you make your money. If it goes down, well, you get to hold on to the company and you get to do it again. So 2 out of 3 ain't bad. I think Meatloaf said that back in the 80s, right? Did that make sense, Saito? Yeah, we already did Bloom Energy. It was a no. Intuit, we'll have to look at that next time. Absolutely. All right. I'm glad it makes sense. Okay. What's your opinion on Granite shares? NVYY. What the hell is that? NVYY. All right. Let's go back here. Do this. NVYY. Hell no. That's my opinion. How's that, Jack? I don't do. Number one, it dropped from 28 down to 12. Now it's August, September, October, November, February. Those are months of the year. Rule 4 is pretty specific. Weekly options only. Weekly options only. No. Eddie, what's the top pick for Young 21? I'm in some SCHD right now. Uh-oh. What's my opinion of Tesla? I love Tesla. I do. Thank you, Richard. Thanks for what you do. Thank you, Richard. Okay, Eddie, I'm going to share this with you, and this will be the last thing for the evening, all right? Here we do. Here we go. Here we go. Uh-oh. Got a comment right here. I went over roughly 300 eligible stocks, and them PEs were shocking. Okay. Now, I didn't use the PEs when I did what I was looking at, because what I'm looking at and what you're looking at are two different things. What I'm looking at specifically is the company itself consistently profitable year after year after year. That means, are they making more money this year than they did last year? Did they make more money last year than they did the year before? Are they consistently increasing? Out of the 11,500 and whatever, okay, there's only about 350 that are consistently profitable for at least 10 years. Going to expire worthless, just buy some more. I got that one. Okay, fine. Understand? I'm not looking for the same thing you're looking for. I'm only concerned, is the company consistently profitable? Are they giving me more money every single year? And do they have weekly options? Two criteria. That's it. Weekly options, and are they consistently profitable? That's it. Consistently profitable and weekly options. Your question, SCHD. Eddie, are you ready for this? You're 21 years old. I say awesome for you, dude. You got a long way to go. If you can get a handle on your money sooner, you'll never have to worry about money when you're older. Eddie, true that, but a year ago, that was not so. Eddie, I hate to be the bearer of bad news. In order to be a dividend king, 5 decades, 10, 20, 30, 40, 50 years increased profits. To be a dividend aristocrat, 25 years increased profits year after year after year. Dividend champion, same thing. Dividend contenders, 10 to 24 years increased profits. Between the aristocrats, the champions, the contenders, and the kings, there's 360 something different companies, all consistently increasing their dividends year after year after year. Those are the only ones that have been on my list because they're consistently profitable, and most of them have options. Okay, that's what I'm looking for. Are they consistently profitable, and can I make money off of them every single week? If I get stuck holding them, that's okay, because they increase their profits every single year. I don't mind if the stock price goes up and down. How many shares do I own, and how many premiums can I collect on those shares? It's just like a car or a house. You're going to buy a house, and the value of that's going to increase. It's going to decrease. It's going to increase. It's going to decrease. It happens with every commodity there is. They go up, they go down. They go up, they go down. So let's get back to Eddie's, help Eddie out with this little dilemma he has. Eddie's 21 years old, and he thinks that SCHD is a good idea. SCHD. All right, Eddie, you may not like what you see, but I'm going to be honest with you because I'm not trying to sell you anything. I just want you to know. All right? Schwab U.S. Dividend Equity ETF, SCHD. The current price, $34.83. Yay! Okay, hold on. Let's see the summary. All right. Well, the yield, Eddie, the yield for 1 year, 3.13. There you go, Eddie, 3.13. You are barely keeping up with inflation. So as inflation increases and decreases, you're getting 3.13%. If inflation is 3%, you're only making if the yield is 3.13 and inflation is 3%, you're making 0.13% on your money. That's it. Hold on, I got some more for you. Let's get rid of this. All right, Eddie, what we're going to look at now is right over here. Historical data. Eddie, historical data tells me what the stock is doing year to year to year. So let's go take a look at historical data and see if it continues doing what it has been doing. Is it going to do the same thing? Hold on. Where are we? Okay, here we go. All righty. Here we go, Eddie. You ready? SCHD, I want historical prices, and I want to see all of them. Okay? More specifically, Eddie, I want to see the dividends. Dividends only. Do you know why? Eddie, because a dividend is a portion of the corporation's profits that they give back to us. So as SCHD makes money, it gives us a portion of that money. And as they make more money, our dividend gets higher and higher and higher. As they make less money, our dividends get lower, lower, and lower. Okay? SCHD is not on my list, but let me show you and then you tell me what you think. So I want to look at all of them, maximum amount. Let's go all the way back to the beginning of SCHD, okay, which is 2011. Okay, the very first dividend, SCHD, 4, 4.6, 6.8, 6.9, 8.6, 6. Wait a minute. It went from 8.6 to 6.6. We lost 25%. Did you see that, Eddie? 8.6 to 6.6 is a 25% decrease. That went backwards. That went down. Now, you at 21 years old, you don't understand this. But 62, retired, I have to live on this money. So if I'm getting 1,000, 1,000, 1,800, 1,000, 1,700, 1,600, if the numbers go up and down, I'm retired. I'm on what they call a fixed income. So the money that I make has to be the same or increase, not go backwards. So let's see how many times SCHD has gone backwards and the amount of time that they've been paying dividends. Okay. Higher, 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 lower. Higher, 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 lower. That's twice. Where was it? Right there. Okay. Higher, lower, higher, lower, higher, lower, lower, higher, higher, lower. Do you see what I'm getting at? Higher, lower, higher, 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 lower, higher, lower, higher, higher, lower, higher, lower. Do you see what's happening here, Eddie? It's going up, it's going down, it's going up, it's going down. No consistency whatsoever. Let me show you one that does have consistent increased profits. Okay, you ready for this, Eddie? Here we go. Let's go all the way back to 2006, because that's 20 years. Okay, this will be my last example. Then I'm going to call it for the night. All right, you ready, Eddie? Here we go. 20 years ago, 8. You ready, Eddie? Watch this. Okay, watch closely. 8, 9, 10, 11, 13, 16, 20, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. And that's it, 91. Okay. Eddie, did you notice that every single year the profits went higher, 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 higher? There's 350 different companies that do this. SCHD does not. You should always know what it is you're buying before you buy it. You should look at the numbers. You should look at the performance. Have they been performing well and for how long? Okay, hopefully that made sense. All right, thank you, you're welcome. Thank you there, Mr. Richard. Merv, man, see you Sunday, you got it. Tim, we'll have to look at that next time. Eddie, thank you, you're welcome. Kill a tree, really? Kill a tree? Yeah, terrible name. Comcast next time. Eddie, Microsoft got you. Any other recommendation? No, Eddie, I don't make recommendations. Right? I don't make recommendations. I make observations. That's it. Just observations. Okay, you give me a stock to look at, I take a look. Okay? I just read the numbers. All right, that being said, you guys have a great day, and we'll do this all over again Sunday. I do take Friday nights and Saturday nights off, so you guys, peace out. Have a great day. See you on Sunday. Yeah, Eddie, DM me or send me your number. I'll give you a buzz. All right, so if you want to talk to me, I forgot to say that. I do not text. I do not email. I do not WhatsApp. I do not, what is that other one? What, Telegram, Instagram? I don't do any of that stuff. You want to have a conversation, go to the website. Put your email in. You'll get the Fab Five every single day. If you want a phone call, DM me your number or go to the website and actually book a call. We'll have a nice little chat, and we'll just go over things. I won't try to sell you anything. Just go over, see what you are, see where you want to go, and see if I can help out. All right, that being said, you guys have a great day, and that means we're going to need some mood music. Yay!
Give a wonder why.
Mood music! There we go. Have a great night, everyone. Your heart set on giving, no matter the strain, building your legacy through love and rain. Fueling those that fire in your soul, the kind that is so broken. Oh. That's a no. What the hell were you thinking? Your life and the yacht keeps a daylight blinking. Every day's a quest that I saw in the skies, with tears in the storm. The dream never dies. Retired.